As of right now, Oklo Inc. is trading at 92.00 USD, showing a positive intraday movement of 2.66, which translates to a 2.98% gain for the session so far. While the ticker symbol OKLO might seem like just another speculative entry in the clean energy space, the price action we are seeing today is part of a much larger and more complex narrative that connects the dots between artificial intelligence, nuclear physics, and the shifting landscape of global power demand. If you look at the recent performance of NVIDIA stock, or even the broader enthusiasm surrounding Apple stock, it becomes clear that the massive compute requirements of the modern age have hit a physical wall. That wall is the electrical grid. Most investors think the big story here is just about building small reactors, but the reality is much more interesting. The market is currently betting on Oklo not just as a utility provider, but as a critical infrastructure partner for the same companies that are driving the current tech surge. Expectations for Oklo have always been high, primarily because the name Sam Altman is attached to it as chairman. Most people believe that having a high-profile backer and a cool design for a microreactor is enough to carry a company through to success. The common narrative is that SMRs, or small modular reactors, will simply pop up next to data centers and solve every energy problem overnight. However, the reality you need to understand is that the path to 92.00 USD today has been paved with regulatory friction and intense engineering hurdles. While the stock is up nearly 3% today, it is navigating a very narrow corridor between massive potential and the grinding pace of the Nuclear Regulatory Commission. The market expects a smooth line toward commercialization by 2027, but the reality is that Oklo is effectively rewriting the rulebook for how we permit nuclear sites in the United States. They aren't just selling power, they're selling a new way to process and recycle fuel, which is something many casual observers tend to overlook when they just see a rising green line on their screen. If you were using a platform like Robinhood or the Fidelity mobile app to track these movements, you've likely noticed that the volatility in Oklo can be just as intense as what we see with Tesla stock on a bad day. Recently, the trading volume has been elevated, often driven by institutional activity rather than just retail hype. We are seeing significant interest from major players who use the Schwab Intelligent Portfolios or Fidelity Wealth Management Services to find exposure to long-term infrastructure plays. This isn't just a meme stock anymore. When you look at the intraday swings, you can see the tension between the long-term bulls who see a $14 billion market cap as a bargain and the short-term traders who are wary of the company's lack of current revenue. The fact that the stock is holding above the $90 mark today is a sign of significant strength, especially given the historical resistance levels we've seen in the mid-80s over the past few weeks. Comment below how many shares of Oklo you currently hold and what price you initially got in at, because the entry point for this specific ticker seems to be the most debated topic in the current market. For those engaging in online investing through an individual brokerage, it is important to understand what the company actually does beyond the ticker symbol. Oklo is focused on the Aurora powerhouse, which is a fast fission reactor designed to produce about 15 to 50 megawatts of power. To put that in perspective, a standard large-scale nuclear plant produces over 1,000 megawatts. The goal here isn't to replace the entire grid, but to provide dedicated off-grid power for specific industrial sites and data centers. This is where the connection to the tech sector becomes undeniable. As NVIDIA stock continues to dominate the AI hardware space, the companies buying those chips need a place to plug them in. Traditional utilities are often too slow to upgrade the grid to meet this demand, so companies are looking at self-investing into their own power solutions. Oklo's model is to build, own, and operate these reactors, selling the power directly to the customer through long-term agreements. This removes the massive upfront cost for the customer and creates a recurring revenue stream for Oklo, assuming they can get the first one built. When you look at the technicals through a platform like the Interactive Brokers Trading Desk or even the SoFi Active Investing tool, the recent movement shows a company that is finally starting to decouple from the general noise of the small-cap market. For a long time, Oklo moved in lockstep with other speculative tech plays, but we are starting to see it trade more like a specialized utility. This is a crucial shift. The market is beginning to price in the value of their site use permit at the Idaho National Laboratory and their various agreements with the Department of Energy. The reality of nuclear energy is that it is the only carbon-free source of baseload power that can run 24/7 without worrying about the sun or the wind. As more investors look for investment help to navigate the complexities of the energy transition, the appeal of a company that controls its own fuel cycle becomes much clearer. Oklo isn't just building a reactor, they're developing ways to use recycled nuclear fuel, which could theoretically provide a nearly endless supply of energy from what we currently consider waste. The professional landscape of online investment has changed, and many people are now using tools like the SoFi Robo-Advisor or various investing sites to build a diversified portfolio that includes these high-growth energy names. But unlike a standard utility stock that pays a steady dividend, Oklo is a high-stakes bet on execution. They have plenty of cash on hand, over $1 billion according to recent reports, but they are also burning through it at a significant rate as they scale up their engineering teams. This is why you see such a divide in sentiment on platforms like the Fidelity trading platform. Some analysts see the massive upside of being first to market with a commercial SMR, while others are terrified of the regulatory delays that historically have plagued the nuclear industry. The reality is that the Nuclear Regulatory Commission is not known for moving fast, and any hiccup in the licensing process for the Aurora powerhouse could send the stock back down toward its 52-week lows. Right now, the momentum is clearly on the side of the bulls. The news that major tech firms are looking for dedicated nuclear power to fuel their AI expansions has provided a floor for the stock. When you see names like Microsoft and Google signing deals for nuclear power, it validates the entire sector. Even if Oklo isn't the one signing those specific deals today, the rising tide is lifting all boats. However, the expectation that this will lead to immediate profits is where the reality check comes in. We are still at least 2 years away from the first reactor going critical, and even then it will take time to scale up manufacturing. This is not a quick flip. It is a long-term commitment to a fundamental change in how we generate power. If you are using Interactive Brokers to play the options market on Oklo, you have to be prepared for the kind of swings that can wipe out a position in minutes. The implied volatility here is much higher than what you would find with Fidelity ETFs or more conservative mutual funds. As we look toward the future, the catalysts are fairly well defined. We are watching for milestones in the licensing process and any updates on the construction at the Idaho National Laboratory site. If Oklo can show that they are meeting their internal deadlines, the stock could easily challenge its previous highs. On the flip side, any sign that the Department of Energy is pulling back support or that the regulatory path is becoming more difficult would be a major red flag. The current market environment is very forgiving for growth stories, but that can change quickly if interest rates or macroeconomic pressures start to weigh on capital-intensive industries. For those who invest online, it's about balancing the excitement of the technology with the cold reality of the balance sheet. Oklo has the cash to survive for now, but they will eventually need to show that they can produce power at a competitive price point. In summary, Oklo at $92.00 USD is a fascinating study in market psychology. The expectation is that the company will become the primary power provider for the AI age, riding the coattails of the massive infrastructure spend we see from the likes of NVIDIA and Apple. The reality is a company that is still in the pre-revenue stage, navigating a complex regulatory environment and burning cash to prove that its technology is viable. The intraday movement today shows that investors are still willing to pay a premium for that potential, but the road ahead is anything but certain.
Whether you are using a Schwab account, a Robinhood app, or Fidelity Wealth Management, the key is to understand that you aren't just buying a stock, you are buying into a vision of the future where energy is decentralized and carbon-free. The contrast between the high-tech promise and the bureaucratic reality of nuclear power is what creates the volatility we see today. As long as the market believes that the energy crisis for data centers is real, companies like Oklo will continue to command significant attention. Always keep an eye on the volume and institutional flow, as those will be the true indicators of where this stock is headed in the long run.